Good afternoon, traders. Welcome to this webinar. Thank you for coming. And let's start. Okay, before we go, is everybody having sound? Those who are not having sound, okay, I guess everybody could hear me. If you're not, let me just type for them so we can. I'll leave that on for 30 seconds so that everybody can see and they can go ahead and click for sound. Okay, great. I guess by now everybody has sound, right? Let's go. Let me just erase that and let's get going. So this afternoon, what I wanted to do was not like we did last week. Last week, I showed you some nice trade setups. And if you remember the trade setups we talked about last week was the Pound New Zealand. Very nice trade. I'm still in, by the way, because I'm in for the long run and I expect it to go beyond this low. So this correction, I actually took off 2 standard lots and I'm waiting for this to correct to add on some more because I entered with 3 standard lots. We talk about the Pound Oz. Pound Oz is a wonderful trade. I think this was a trade call to sell in that breakout. We talk about the Euro New Zealand. We said look for the breakout of the Euro New Zealand. This one didn't go as aggressive as we expected, but it's still a very good trade. Actually, it's 2 nice trades you had there. And we talk about the New Zealand dollar, right? I said watch the New Zealand dollar for this up move. I actually posted this one, so I hope all of you got this trade. Right? I hope all of you got this trade at least to the trend line. And then I said, when it comes to the trend line, you want to watch it, right? When it comes to the trend line, I think I wrote that, right? Somewhere in the correction, when that goes to the trend line, you want to be careful, right? Because that was a trade. So I hope all of you got those trades. If you didn't, well, you have to, practice more, train more, and get them. To add you on Skype, is this what you have to do? You have to add me in Skype. Skype has nothing to do with the song right now. Skype is for you to contact me concerning the course. Let's talk about that at the very end of the webinar. Please, we don't start the webinar with that. If you guys can keep all your questions for the end of the webinar, would be very nice. I would leave enough time for questions. We're going to go very fast through the topic of today. What I want to start with today, the topic I really want to do today is talk about advanced patterns and wave patterns. Because on TradingView, there are thousands of traders using advanced patterns. Now, I'm not criticizing any one particular trader for the use of advanced pattern. I'm not criticizing any trader, for that matter of fact, for the use of advanced pattern. I'm criticizing that what I'm talking about is how they use advanced patterns. And what I have found is that many traders are using it incorrectly. And because of that, their results are very, very miserable. And even some of them who assume that they're the bosses of advanced patterns, which means they really know what they're doing, right, are using it incorrectly. And that is why I look at a trade. I look at one of the supposed to be top traders in TradingView who is posting this advanced pattern. And I look at the trade on the Pung and I said, gosh, that trade is a loss, right? Because immediately or just before that, I post a trade that is telling you that Pung is going to go down. It's simple, right? You look at structure. I look at the structure, and I think a number of other traders also posted this structure, that, guys, this thing from the top here is going to go down. So I don't care what advanced pattern you put, that at this point you're looking for a buy, you're likely going to lose that trade, right? So why is it that these traders are making those mistakes? I am not reading the chat. Too many chat there. If I read that, we'll just get distracted from the webinar. So my traders will help me there. If you guys can help to monitor what's going on there and answer questions for them, that would be great. Any questions on the topic, keep it for the end of the webinar. Yep. So we have been posting this chart, this pattern for a long period of time, right? Wave Kong possible. If you look at it, the number of patterns that I've been putting out showing you that this thing is going to come back here. That's not, let me be honest with you, that's not exactly how it went. That's not what it did. It did come to the low, but I'm not counting it as a 1, 2, 3, 4, 5. Remember, I'm not counting this pattern as a 1, 2, 3, 4, 5, although it came to the low here, because it's making a different structure. And because it's making a different structure, I recounted that structure And I said it's still a corrective structure, but we are anticipating an up move and one more move down. We got the up move and we got one more move down, right? We got the up move here. We didn't get it all the way to the top. We're getting the one more move down. So it doesn't matter how much advanced pattern you put in this thing. It doesn't matter what color you put it. It matters how you draw it. The structure will do what the structure will do. So let me start today's webinar by something all traders should know. Every single trader, if you plan to become a trader, you should know this. The chart is a collection of statistical data. Just get that down very clearly in your head. It's a collection of data. The data will not do and will not respect anything you put on the chart. I don't care what the hell you put in the chart. The data will not respect it. The data is not there to respect your trend lines. The data will not respect your moving average. The data will not bounce off any of those things you have. The data will not respect your fib. The data is not there to respect any advanced pattern you put on. It's not there to respect those things. That is not the point of trading, right? The point of trading is that whatever you're putting in the chart is a tool to read the data. Just get that very clear. You don't put an advanced pattern and assume that it will turn from there. No. You put an advanced pattern as a tool to tell you that the data, if it's doing this as part of the structure, this is what it will do. This is how it will react. So these are tools we are using to tell us how to read the chart. If you are not using the tool correctly, you're going to get your fingers damaged. If I give you a hammer and you use it incorrectly, you will be without fingers. Right? You're going to pong them all. So it's a tool. You have to use it correctly. It's actually made to use correctly. The same with trend lines. 90% of traders are using trend lines incorrectly. They get what they call false breakout and head fakes. There is nothing like head fakes and false breakout in the chart. Nothing in the chart is false. Let me repeat it. It's a collection of data. It's a statistical collection of data. Nothing in it is false. If you have a wick, the price was there. If you have a gap, the price wasn't. The price fall off that piece very fast, probably over the weekend, right? So nothing in that thing is false. Just get that clear. Get that whole terminology of false breakout and head fakes out of your head if you ever want to be successful. Just get rid of it immediately. Because if you look at the chart as anything false, you're no longer a trader. You have no clue what you're saying. You have no idea how to read the chart if you're looking at it as something false. Because at any point, any of that data could be considered false. You could put the line incorrect. It breaks out of your line, go back the opposite direction. Oh, well, we had a false breakout. No, you didn't. You simply put your lines incorrect. You have no clue what you're doing. Now you have to do, or maybe it did break your line. It made a correction and it's going back down. All you have to do is correct your line. If accidentally it bounces off a moving average, it's not because it respects the moving average. It's just that the moving average accidentally is where the price action went to. How many times they broke that moving average? Every single time they do that, right? So it is not about your tools that you're putting on. And the next myth I hear traders say is, well, if you test your strategies and this one did not work, it doesn't mean your strategy is wrong, that the strategy is right, but just this one didn't work, that the other one didn't work, the other one didn't work. Just keep working at it. No, you will lose your account, keep working at it. It means you're doing something wrong. If you keep using that strategy and you get 60% of it wrong, you need to change it. You have the wrong strategy. It is not working. Whatever you're doing, it's either you're using the tool incorrectly, right? Or the tool itself is not working. You decide and you changed it. It's very simple. So I want to start today by repeating again. There is nothing false in the chart. It's a collection of statistical data. Every single thing in it is true. The tools you're using are just tools. The chart does not have to respect them. If you use them incorrectly, you're going to lose your account. So with that, let's start with advanced patterns. What really is advanced patterns? What is the whole concept of advanced pattern? The concept of advanced patterns is very simple. You're going to have a movement, very likely an impulsive movement, which they are going to call the XA wave. It doesn't matter what you label it. You can label it XA, whatever you want to label it. But people are very cling to labelings. Labelings are just letters. They don't mean anything. They're just a way of identifying a piece on the chart. You could label it ZW, you know, AC if you want. It doesn't matter what you label it. It matters what the structure is going to do and what you're identifying. You could put Chinese letters there if you want, right? You could put Roman letters if you want. It doesn't matter what you put on the chart. I want you to always get this down in your head. It's not what you put on the chart. It's what the chart is doing and how you're trying to identify the next move. If you're in my course, you would see me said wait for the correction and then sell. Right? If you're one of my traders, you've been following me for a while, you would see I would say wait for the correction and sell. So what is advanced patterns? What are people who created these advanced patterns? What were they looking at? They were looking at this corrective structure. And what they saw in that corrective structure is something all Elliott waivers know. If you're an Elliott waiver, you should know it. Sorry. If you're an Elliott waiver, you should know that when you have an impulse, you're going to get a correction. Very often, the correction is a 1, 2, 3, an A, a B, and a C. It's called a flat. It's the simplest correction that Elliott has identified in the chart. It's called a flat. It's an A, B, C. Very simple. After an ABC correction or a flat, you will have another impulse. If you're an Elliott waiver, you would know that that is only one type of corrections you can get. And there is a variation of that type of correction. You can get an expanding flat, you can have a running flat, you can have a simple flat. Right? You can also have a wedge or triangles as they call them, right? Barrier triangles, expanding triangles, contracting triangles. And I will try to show you examples of each one of them on the charts itself. Or you can have a zigzag correction. That means your Elliott wave pattern will just go through the door, right? Your advanced pattern will just go through the door. Sorry, not Elliott wave. So what the people who created this advanced pattern, what they notice is that if you have this one pulling back to about the 50, the 618, that the first A wave will pull back to a certain fib level, right? That's kind of what they notice. It's going to pull back to fib level, and then the B wave will make a corrective structure back to a fib level of this move. Of this move here, we will make a correction back to a fib level. And then the C wave will go back up here to make a correction at this level. Right? So this is your impulse, this is your corrective, and then you're going to go. So what they did is they just labeled it this way. They just said, well, we could set this as the A, the X, and the A wave. This is the A and the B wave. The B and the C wave, the C and the D wave, right? So they assume that if we label it this and we connect these two, we have something that looks like a pattern. It looks like a butterfly. It looks like a bat. It looks like a Gartley. It looks like a cat. It looks like whatever your imagination tells you it is, right? It all depends on how far you can stretch your imagination, right? You stretch your imagination, you will see anything in there. All you're looking at is the data showing you a corrective structure. You pull these two lines together, and this thing, you can sell from here, or you would be correct. You may have a correct trade if it's a flat. Dragonfly, anything you guys want to see. I don't want to stretch my imagination because I just look at the chart as data. I don't look for animals in the chart. I look at the chart as data, and I treat it as data. I don't see animals in chart. I could repeat this every time in every of my webinar. I don't see animals in the chart, and I don't see support and resistance in the chart because it doesn't exist. It simply doesn't exist. There is nothing like support and resistance in that data. If you see them, I'm glad. Congratulations. You have good imagination. I don't. Right? So here's what we're going to do. You watch for this. In this case, you will have a perfect pattern that works. Now, when will that pattern fail you? That pattern will fail you when you start to make something called a wedge. You have the same impulse down, right? You have the same impulse down. You have the same impulse coming down. You get a correction up. You get another correction down. You have a correction up. But this correction up does not break to go down. Instead, what that correction does is Control Z. What that correction does is make another small correction here and continue to go up. And your pattern goes through the drain because you're supposed to put a stop above here. right? So you sell there, you put a stop somewhere here, you watch it come here, take you out, and keep going up. So you wonder what the hell happened there just now. Well, what happened there just now was that you didn't take into consideration that this X you're putting here is the last impulse on a bigger wave coming down. And this is the start of an up wave that is going to throw you out totally. That's one way wave pattern traders lose their trade, because they assume that the wave pattern is going to work every time you see every time you see a structure like this and you could connect them, you have a wave pattern, right? They assume you have a wave pattern there. And what they don't do is they then look at the bigger structure or the structure in general. And I will show you some of those trades where they're wrong. Or you get another structure. You have a wedge. You have a very sharp move down, and you get a move up, a move down, a move up, a move down. Right? Sorry, this one should be shorter. Let me just draw it. Erase. I'm drawing a wedge. You got to move up, a move down, a move up, a move down, a move up, and then you go. You get a wedge pattern. In that case, if you're putting your advanced pattern, which is your X, your A, your B, your C, you will not get the D wave. It will not go there. It will just do this and come down. So you will not get this pattern to work. And how many times have you seen that? When the pattern just didn't go. And it's simple. You will miss this trade, although Elliott waivers will get the trade because we will be selling here. Some of us will be selling here. Depends on our skill level. Why we would do that? Because we have an idea of what that correction is. Let me show you an example of that correction in the yen right now. Let's go in the yen daily. And let's come back to this level. See, this is what you call a wedge pattern. No Gartley will ever work in there. This is your impulse. This is your corrective structure. And there you go. Actually, this is the first impulse on the upside. They pull back and they continue to go. So if you see a pattern like this in a 60-minute or in a 15-minute or in a 240 and you try to put your Gartley in it, you will get it wrong. The next thing I see Gartley traders do, these advanced pattern traders do, is they take the pattern and they pull it from in the middle of the structure. They grab a pattern and they pull it from the middle of the impulse and they do something like this. And they said, well, I got a pattern. Well, you know what? That is not only so wrong, that means you don't have a clue what you're doing. Because what you're supposed to do is take the entire impulse. This is your impulse. This should have been the correction. A move up, a move down, and this would have been your Gartley trade. Or your advanced pattern trade, whatever you name it. That would have been it. But you would have not got this trade here now. And the reason you wouldn't have got it, it doesn't matter the time frame. That could have been a 15-minute chart. You wouldn't get the trade. And the reason you wouldn't get the trade is very simple. Because the pattern you're looking for is a 1, 2, 3 pattern, an ABC. And it doesn't happen as an ABC every time. All those patterns are based on the fact that you're going to have a 3-wave correction. Sometimes you have a 5-wave correction. Sometimes you have a wedge, which is also a 5-wave, but a contracting one. Sometimes you have an expansion. In the expansion, well, they will be lucky because they will get a move going. It will not go to their target, but it will go. Right? So the whole idea of Gartley is that you're going to have a flat. You're going to have a perfect flat structure. Here is where a Gartley would work perfect. Or one of those advanced patterns. You get a pullback here. You get a move here. You get a pullback to this level. And you could buy this and it is going to go. Because that's a good one. Here is the next one where it's probably going to work. You can take this for your A. You can take this here. Let me just take off that one. Not take it off. You can use the bigger one here and it will probably work also. Oops, sorry. Let me just pull, not that one. I want to pull this one. You could put it here. This is your wave. This is your pullback. This is your next wave. This one will go. And this one was a perfect one, right? You don't get them perfect every time. And the reason this one is perfect is because the correction is very clear. 1, 2, 3-wave correction. You don't always get a 3-wave correction. But in this case, kudos, you got it. In this case, it will work. So remember what was the topic? Sometimes they work, sometimes they don't. So it's all about It's all about what will this structure be. But if you're an Elliott waver or if you're a wave pattern person, you would know what the structure is doing, so you will not miss this trade. By all means, you will not miss this trade. This trade is based on the basic theory that you're going to get an impulse. Like I always said, you're going to have an impulse, you're going to have a correction, and you're going to get a next impulse. You have an impulse, you get a correction, you have a next impulse. So if you learn to read this, you don't need advanced patterns. Advanced patterns is a shortcut for understanding wave patterns. So because some traders are lazy or they don't have a clue what wave patterns are, they move towards advanced patterns. Here is a good example of where you may not get anything. A next example of where you will not get it. See this? This was the corrective structure. If you're putting an advanced pattern in any means, you notice all of them have the similar look. So advanced pattern, you will do something like this, you'll do something like this, you'll do something like this, and you need to bring it beyond this point. It has to come beyond that point. This correction never went beyond that point, right? The correction, the C wave never went beyond the A wave, and it takes off. In our case, it's the breakout. You can buy the breakout here because you're looking for that impulse up. That is how simple it is. It is as simple as that. I don't say they don't work. They will work if you put them correctly and if you get the structure to do what you expect it to do, which means if you have a very simple A, B, C correction, it will work almost perfect. If the correction is not a simple A, B, C, you're likely either going to lose the trade or you will not get the trade, which means it will not come to your advanced pattern that you're looking for. In this case, it didn't come. In some cases, you will even lose it. Traders tend to put them upside down sometimes. They're putting them all over the place and totally upside down. Now, I can't go and pick any charts or anybody's pattern from there and show you here, but you can do that yourself. You can take any advanced pattern trader's pattern, 100 of them, click on them, and look at the results. Look exactly where you were putting your stop and exactly where you're putting your entry, because very often you will be stopped up before it goes. Very often, I've looked at many of them, and believe me, I'm not just guessing when I do. Before I say something, I test it. I actually went and tested a lot of those advanced patterns that were put out there. And I saw where they're making their mistakes. Based on wave patterns, you can clearly see that that was an upside down one. It will not work. The PUM is a very good example of a big upside down pattern that will not work. If you're putting this one, if you want to put a big Gartley or a big advanced pattern here, this is what you would do. You would take this as your entire. This is your entire A wave. The first move down here is your. This one, you'll put this move up here as your BEC, and then you. Oh, sorry, I clicked it twice there. Let me just remove it. My fault. This is your first impulse. This is your pullback. This is your move there. This is your move here, and this one should go. In theory, what you're saying is that they have to make a next impulse, which means a next impulse that will lead this from here. Let me grab the drawing tool. From here all the way to the top here. That is what you're expecting it to do. It should make a next impulse of this magnitude, right? As an impulse, a correction, and an impulse. But what happened here? It keeps going down. And the reason it keeps going down is because you're having a more complex corrective structure. You're having a very complex corrective structure right now. So take this out. And if you're a structure person, you would know that every time we saw this structure, we know that this thing was coming down, right? Because it never broke out of our correction. It's still within the correction. It is still a corrective structure, which means you were still looking for a sell. Even today in our trading room, we're looking for a sell, right? So sorry, I moved that fib. I'll change it. We're still looking for a sell, a very short-term sell. You still have a sell pattern here in play for a short-term sell to here, and then we're looking for the reversal. Then we're looking for the reversal. And guess what? There is nothing in the chart that says this is the one that will go. There is a very high probability that when they come here, they will probably make a next three-wave pattern like this before they go. Because we could still complete this one here with a five-wave pattern, and this has three waves in it. Let me just show you that. This part itself could complete with a 5-wave pattern, and this part has 1, 2, 3. This is your corrective structure. It has 1, 2, 3. If we get a corrective structure here, we're looking for 1, 2, 3. If we don't get a corrective structure, which means we get an impulsive move out from here, we will be looking for the next impulse up. I wouldn't make such a comment that the Pong does not work with advanced patterns. I think if you put them correctly, they will work. The question, are traders putting them correctly? And I can actually show you some that will work. You want me? Let's go to the 240, and I will show you some. If you put them correctly, you'll get them to work. So in the direction of the impulse, you're going to put the trade. Let's suppose you want to put an advanced pattern on this trend going down on the 240. You would have to select your impulse, which would be this. If the person was looking correctly, and I just didn't want to show this, but I'll show you. If you want to show a correct advanced pattern, this is what you do. This is your impulse. This is your A wave correction, your B wave correction, your C wave correction. What happened to the B? Wait, let me just get the B. This is your impulse. This is your A, your B, and your C wave correction. Did that one work? Perfect. All you had to do was fib this and look for your fib. First fib was the 50. The next fib is the 618. A perfect 618 sell. A couple of my traders actually sold that 618 fib, but we didn't sell it because of an advanced pattern. We sell it because of what structure is doing. And why did we know that was going to happen? Look backwards. You see this? This was a 3-wave pattern. 1, 2, 3. So in my class, I said, guys, we're going to have 1, 2, 3. I think I posted a chart to this effect. I'm pretty sure about that. Somewhere in the charts, if you look around, I post a chart for this move up and this move down. So I was very amazed when I see people putting out two or three upside down patterns and say this is what it will do. If you use this to put your advanced pattern, you're incorrect. And you know what you're wrong? This is a correction, my friend. That is a correction. If you want to put an advanced pattern, here is another one that would have worked perfectly. This is your impulse. See, this is an impulse. This is a correction. This is the next correction. That's a correction. You can fib it to see whether they fit whatever name you want to call your advanced pattern. See whether it's a crab, whether it's a bat, whether it's a Gartley. It's up to that. You can look at that. I don't look at that. I don't need to look at that. Right? This one will work. Right? You can actually fib this one and probably get it, although it would be incorrect if you fib this. If you want to fib the whole impulse, you have to fib this as the whole impulse and fib that. And that means if you want to put your Gartley, this will have to be your Gartley. This one here, the B wave should come. Let me take that out and show you. You should have a bigger Gartley, which should be something like this. This one should come here. This is your first wave up. This is your second wave down. And your third wave should be actually way at the top here. This should be the one. Way at the top there, right? Somewhere at the 618 here. Somewhere at the top there, right? 786 because this one came back to the 618. Actually, I was looking for that 786. I had a chart posted that they will probably go there. Let me show you the chart that I had posted that they'll go there. We were using this trend line. And I thought that they will make that simple 3-wave, because when you do forecast in advance, and I like to do forecast in advance, you're thinking that this wave will come back to the top here, right? Like this one. We thought we were going to have a 1, 2, 3 correction like that. We had the 1, we had the 2, the 3 never go above, and then they start to come down. This was my chart. If any one of you remember, I had a chart out like that. Wave counts, let me see if I can show you. Not this one. This one was more or less what it did. I had one before that showing that we're going to make, keep clicking the same thing. I just wanted to take off this here. Let me take it off. Right? Good. I had a chart there showing you that there's a possibility that this wave, everything disappears. Good. I think somewhere in here, we had a chart showing you a possible wave coming back. This was showing you the outside. This one, somewhere in here, if I can find it. Showing you that we're probably going to possible structure going up back. Yep. I think, right, this was it. See? I remember we looked at this pattern and we said, okay, this is the impulse, this is the impulse. So we're looking for 1, 2, 3, and then the next wave down. But that didn't happen. And the reason it didn't happen, this C wave never went above. Remember I said there are a number of ways this C wave, these corrective structures could go. So when we saw that happen, we just pulled this line and we said, if they break here, we have a sell. And that is when I reposted the chart, because once I saw them breaking this low, and I said, okay, they're going down now. It means this structure is not doing the way I think it's going to do. It's likely doing this. I think this is where we said it's still a corrective structure at this point, and we change it to not that one, this one, somewhere in here. We change that pattern to this lower move coming down here, right? Because a lot of people start to freak out, and I said, guys, it's a corrective structure. It hasn't changed. It is just the structure has changed a little because we didn't get a larger C wave going up to the top here. We got the C wave stop here short of the A wave. And that is one of the places where your Gartley will not work. And that is the place where you become a seller when it breaks here. Or you become a seller when they break this one. Right? Because by wave patterns, you anticipate that not every time the C wave will go above the A wave. It's rare, but it happens. Is it possible for the GU to go down? It will go down. I'm pretty sure. If you're talking about whether it's going to go down now, that's a whole different story. We can talk about that. It's possible, but right now I don't see that in the structure. Nobody says it's impossible for this to go down. I'm still looking at this as one part of the correction, right? I'm looking at this as of now as one part of the correction. And we have a rule. Not something I can tell you here. We have a rule how to identify it when that correction is no longer a correction. As of now, this is still a correction for us. We're looking for this wave up. Don't miss that wave, by the way. It's very likely to happen. As of now, we have a 90% chance of that happening. If this structure changes, I can show you what you'll be looking for. If this thing breaks out of this structure here, it has to break this structure. Right? It has to break the low of this structure. Break out very violently. It has to make a corrective structure up like this. And then we will all be sellers going down. As of now, no. That structure is not showing us that. Just to answer your question. So let's get back to where we were. Advanced patterns and why they don't work. So I showed you a number of reasons why they will not. And the reason they will not work is because these corrective structures get very complex. And, let's take the euro, for example, right? Take the euro. This would have been your Gartley pattern. If you're looking for a Gartley here, you're going to have hell to get one, or looking for any advanced pattern, because this is your impulse. This is 1, 2, 3. That's your correction, right? That's your 3-wave correction. Now, this thing is supposed to be going down crazily, but we know, if you're a wave trader, you know that these patterns get very, very complex. So this 3 pattern is just one for us. This is just one wave. This has become your double wave. We're looking for a 1, 2, 3 down, and then a 1, 2, 3 up to make an X and a Y. Right? This is what you call a double tree in the Elliott wave theory. Right? You know what double trees and triple trees? That is where the patterns become much more complex than just a simple 3-wave correction. I don't think as of now that 3-wave correction is all you have. Looking at what it's doing at the low here, I'm thinking because it's dying out and we have divergence, I'm thinking that very soon we will get a move up. The move will go 2 ways. It's going to be very sharp or it's going to be very flat. If we get a very flat move, we'll be selling. If we get a sharp move, we will be buying. So we will be buying here on that breakout in any case. If they break out of this, I'm a buyer. If they break out of this structure to the upside, I'm a buyer. If they break to the downside, I would leave it until they correct and then I will sell. I am anticipating the break to the upside to buy, and then we will see how this goes. Is it going to go pretty sharp or is it going to go like this? Because if it goes like this, I'm a seller from here. If it goes like this, it pulls back, I'm a buyer. It pulls back, I'm a buyer. Right? So it all depends on how this structure develops. Yep, which is an ending diagonal. We're not going to discuss Elliott wave structure though. Thank you. You know the word. You knows it. Considering the fact that Pung has a high probability to go up. Pound New Zealand and Euro New Zealand short. The Pound New Zealand short is the last wave to the downside. I think we discussed that the last time. I even have it drawn for you. I'm anticipating this to break the low and then turn to the upside. I think I have this showing you, the arrow showing you that trade. If you look back at the daily charts, you guys have to look at the charts I post. We're looking for this move to go up eventually, right? And the reason is simple. This is your impulse to the upside. You see this correction? This was your move up from there. You have a 1, 2, 3 correction and move up. You get a 1, 2, 3, 4, 5 correction and a move up. Remember what I said? Corrective structures could be 3 waves. They could be 5 waves. They could be much more complex than that. So we are looking for this thing to make a wave up as soon as we break this low. So more downside in the pound New Zealand, very sure. We have some more downside. I believe so. And then we'll be looking for that turn to the upside. Euro New Zealand, that's a whole different story. It's almost over. I think it's almost over. You notice I have it very close to where I think it's going to turn to go up. This is a sharp wave up. Do not miss this. You see this move going up here? This is an impulse. This is going to be an impulse. Don't miss it. Right? Don't miss that impulse to the upside. We are in the very last piece in the Euro New Zealand here. We have divergence. We have divergence. We have divergence in lower time frame. We do. Right? So this move is going to go up very soon. Maybe one more fall. See that? Well, please people, when I'm on a daily chart and I said very soon, that's a couple days, maybe a couple weeks. When I'm in a 60-minute chart and I said very soon, that's probably a couple hours, couple days. So don't go tomorrow and say, well, he said it's going to go up Monday, we should be buying. No, right now it's still in a downtrend. It could drop one more here and then we could go up. Right? One more drop is possible and then we could go up. If it start breaking this trend, I'm a buyer. Very simple. Well, that's not what we're discussing here today, right? I'm just showing you how these patterns would work. Here's a nice Gartley if you wanted. Here's a nice advanced pattern. If you put this correctly like this, here, here, and here, you got a nice pattern. You know, I could put these patterns everywhere and put them absolutely correctly. If you see them correctly, you put them correctly, right? A lot of people just put them incorrectly. This is a good one if you put correctly. They work on these small time frames if you get a perfect 3-wave pullback. Not every time you get the perfect 3-wave pullback. But as long as you reach that stage where you learn wave patterns, you don't need these. These are like training wheels on your bicycle, right? You learn to ride with those training wheels and then you take them off. So you don't need to put advanced patterns on your chart if you understand structure, right? That's one level above it. And if you understand structure, you see those patterns on, but you don't need to put them. You know, I don't put a lot of things on my charts on because I don't need to. And you wouldn't need to if you learn to do this correctly, right? It's very, very, very simple. You don't need to have a lot of colors on your chart. I just put different colors of arrows because I want you to differentiate them. As a matter of fact, I could just put one color of arrows and 1 or 2 lines, and that would be enough for me. When I put these charts out, I have more things in the chart in TradingView than I have in my chart when I'm trading. Because I need you to see that this is a different level of trend of arrows compared to the smaller level of arrows. I don't need that to know it. I know it. Right? So sometimes I have to use 4 or 5 different colors of arrows so that you guys could differentiate them. Right? Because then I'll get 1,000 questions if I don't do that. Right? What does that arrow mean? What does this arrow mean? And please, I can't answer all the questions. Right? So I put them in different colors so you could figure out that this yellow belongs to this section and this blue is of a separate move. Totally. So in terms of advanced patterns, I'll go back very fast so you guys are going to do. It's an assumption that you're going to have a very simple 3-wave correction, an ABC correction, and every time because they all have there. If you look at all of them, let's open them. You see all of them, they have that 1, 2, 3, 1, 2, 3, 1, 2, 3 correction in them, right? They all have the 1, 2, 3 correction in them. That means you're going to have a 1, 2, 3 corrective structure. And as we all know, wave structures don't behave that way. If you don't know it, you can go for yourself tomorrow, go to elliottwave.com, open the book, the theory, Elliott Wave Principles, and I think in chapter 2, you can look at all the corrective structures in there. You will know what they look like. The book is free. You can read it free online, and it's wonderful. You should at least read that book once, and sometimes maybe twice, maybe thrice. Now, after you've read the book and you're totally confused about Elliott Wave, you can come to me to clear that up for you. Right? That's what I basically do with all my traders. Clear it up for them and let them see how beautiful and how clear and how simple it is. It is very, very simple. It is not difficult. So I promise you I'll take all your questions so we can start with the questions now. I think you've seen why they work sometime and why they don't work sometime. Here is a very nice one that would work if you put it correctly, right? You just got to put them correctly. Very nice one, right? But you don't need it. Why do you need that if you can see it? You can see that corrective structure very clearly. You can see your 1, 2, 3 pattern up. Impulse 1, 2, 3. You're looking for a sell either from the top there or from the breakout. How about putting an advanced pattern in this one? See what happens? It wouldn't work. That's a more long drawn out pattern. So it simply wouldn't work there. Complex structure, how do they look? Go look at the ElliotWave.com. I just tell you where to look at all the structures. If we start doing that, that's a 6-week course. If I start explaining complex structures to you here, that's a 6-week course. I don't think any one of you right now have 6 weeks to stay here with me. Take the course and you will learn how to identify them and how to use them. Right? So, sorry about that. Let's go. Questions. Let's get the questions. Any questions in advanced patterns and what you don't know about them or what you think, why you think they don't work or they work, or let's go. Or on the topic we did today. Complex structures are double trees, triple trees. I think wedges are complex structure because a lot of traders don't identify. They can't see wedges in a pattern when it's happening. They get totally confused. Zigzags, although they seems to be simple, are very complex. Traders have no clue they're in a zigzag. They take it for an opposite direction, for a trend going the opposite direction. Right? There are a lot of patterns. Let me show you the punk cat. I like to show my traders these because I make them take copies of it and keep it. Right? So that they will learn something. How long a corrective structure could be. This is your corrective structure. I showed you guys this before, right? I think so because I have the top and bottom draw here, right? So this corrective structure took from whatever this date was. Let's see, what was that date? 2010, August, somewhere there, August, June, July, or somewhere, the 7th, I think, somewhere, 8th is August, right? So let's say from August 2010 to 2013, March. Quite a lot of time before it eventually gave you that impulse. You want to tell me which advanced pattern would have worked in here? None. Absolutely none. And the reason is why they're not taking into consideration that the correction could become very complex. What they're taking into consideration is that you're going to have a simple 1, 2, 3 correction. And look how many 1, 2, 3s you have in here. You have a next 1, 2, 3 up. You got a sharp wave down. You got a 1, 2, 3 up. By the way, this all in all becomes 1, 2, 3. You got another 1, 2, 3 here. 1, 2, 3 here. You got to pull back, and then you got another one down. This all becomes 1, pink. 1, 2, 3. This is your third wave up. So you have, all in all, you have, if you put that in green, let's say, you have 1, you have 2, and you have 3 waves. So by all means, it's still 3 wave. It's just that it's extremely complex 3 wave pattern for you to understand. If you're not a wave structure person, you would really, really have problem with that. See? So what else? What's the question? Let's see. No, correction will never become impulse. If you see correction become impulse, you're looking at it wrong. A correction is a correction. An impulse is an impulse. You never change them. Can you simplify them to impulse and corrective without Elliott wave patterns and just use that to trade? Yeah, you could do that. By the way, what you guys need to do is understand that in a corrective structure, you have 2 impulses, right? A big corrective structure is actually an impulse, a correction, and an impulse. An ABC, right? An ABC is an impulse, a correction, and an impulse, right? All of you know that. If you don't, you can actually go. They have 10 simple classes on ElliotWave.com that are free, where we explain to you these simple patterns of how they work. You can listen to them. They're basic. You wouldn't learn to do Elliott wave by listening to that. Believe me, you will not learn to do that. You can look at all the videos they have there. You still wouldn't be able to count Elliott wave. And there's a reason why you wouldn't be able to do that, because nothing, what they're going to find is some very perfect place in the chart and show you. They will not show you how to read the entire charts, the chart in its entirety, the full chart, right? And then you become totally confused. And that is where something we show you to do in our training course. I show you how to break it up and how to put them together. Not only how to break it up into pieces, but how to put these pieces together to form a whole structure, a structure of a bigger degree, right? It's like a cube. You have a small one, then you have four, or a square. You have four of those. You get one square. You add 16. You get another square. You add more, and you get more squares and squares and squares until you get a very big square. Right? If you start loosening them up, each piece will be a square. Right? So it's pretty much like that with Elliott wave. It's fractal in nature. Each fractal part connect together will show you one of a similar look. Right? Now, the problem with that is, how do you identify what is a single wave in all those structure? And traders get it totally wrong there. That is something I can help you with. Let's go. What is the other questions? Could you please start posting Elliott waves? Nope, I will not do that. I will not post my Elliott wave count for many reasons. One, because it is not the count you guys, any one of those Elliott wavers are using on elliottwave.com. That is one reason. That will create a big uproar, because when I post a count that is different from another trader count, and well, it depends on whether I'm right or wrong, we're going to have a big argument over it, and I don't want to start that argument. Right? I remember once posting a chart saying this is an ending diagonal, and one trader was like, well, that doesn't fit the Elliott wave ending diagonal. I was like, okay, thank you, it is not. But we traded it, and it actually was a perfect ending diagonal that broke to the upside. Right? And we took the trade and we made money. So to stop those arguments with people who treat Elliott wave as a religious book, right, as the Bible, to stop that nonsense with arguing with them and wasting my time, I rather don't put my count. The training program, I still think we can take some more questions before we do that. I broke out with Euro Chief. I don't know. We can check it for you, but that wasn't the point of the. I was looking for more questions on the topic itself. Yep, we do have a breakout. Now you have to wait for confirmation of that breakout. Do not jump into the single chart, onto the single trade there, right? Wait for it to give you. It's a daily candle, so go to the 4-hour, and you're going to have a 4-hour pullback correction, and then you take the trade. Wait for a corrective structure before you take the trade. Yep. What else? Any more? So no more questions. Okay, I'll give you guys a couple of minutes about what we do in our trading room, or in general what we do in our group, and then after that you can ask more questions. And in New Zealand, the pound New Zealand is it's still in the downtrend. It's just making a move back to the top of the trend, and then we'll see whether it breaks down. Right? I think it will break down. I'm pretty sure it will break down, because they haven't broken the low of it as yet. Normally they will try to break the low. So let me talk a little about, everybody asking me, because I get tons of questions on Skype and thing about the trading room. This is what we do. We have a 6 weeks training course, where within that 6 weeks, it's a practical course, which within the 6 weeks, the first 2 days of the week, I will do the theory. I will show you how to put trends correctly, and I will show you how to put fibs correctly. Now, I know most of you are saying, well, I have 5 years experience. I don't need that. Sherman is in the room. He can tell you he has much more than 5-year experience, whether putting trend made a difference to him when he looked at it, right? We have Sherman, we have Humor in the room. Mark in the room. Mark has about 10 years experience. He can tell you whether when he did the trend course, whether that made a difference to him and how he starts putting trend line, right? So I teach you those rules, and then you practically do it on the chart you're choosing, which means you will do the practical work and show me how you're doing it correctly, whether you grab the concept that I showed you, right? And after that, basically, after that, we move on to the next topic, which is MACD. I show you how to use the MACD. The same thing, we do 2 days on MACD, and then 3 days you do practical. The courses are limited to 20 people so that everybody gets a chance to do the practical part. And then we move on to wave theories, and then we move on to that. For the whole 6 weeks, we are doing practicals, and then I'm pretty much begging the traders to do the practicals. Come on, guys, somebody come and do the practical today. I want to see you. I want to correct your work. Literally begging them to do the work because they start hiding from me by that time, right? But pretty much everybody does the work because they have no other choice. You're in the group for life. You pay me for the 6 weeks, but you aren't going anywhere. So at any one time, if I look at your charts, and I get to look at your charts every time we go into the trading room, or anytime we're doing a webinar, or anytime I see your charts and I see you're doing it incorrectly, I correct you. I also do 2 daily webinars in the London Open and the New York Open. Every day we do 2 webinars. It's either the London Open is every day, that's totally every day. The New York Open, when we have classes, we don't do it. But when there are no classes, I do it. So every day you see me twice a day, regardless of whether it's a class or it's a webinar in the New York session. You see me twice a day, and I always start those days with, do you guys have questions? So any of my trader who has any question or any problem, that is how we start the day. And it doesn't matter how long you're in my group. You could be in my group like forever. If you have a question, you will ask, and we will look at it. So you get lifetime support like this. For the rest of your life, you will be in this group. We have a trading group where the same group gets together. That is without me, but sometimes I'm inside. They get together. They analyze the charts after the webinar. They saw what I was showing. They go, they analyze. Some of them may do other charts that I don't show. They have a lot of experience. They will analyze charts. They will look for trades. It will be based on the strategy and the techniques we use. And they will take the trade if it's happening in the room. If it's not, they will put that as something we can look at for the next trading session. Right? The trading sessions are 24/7. We open it as a 24/5 room, but we have traders Saturdays and Sundays practicing their skills in the room, and you can do that too if you join us. Right? Practice your skill to become a trader. Basically, that is what it is about. Right? If you have any questions at any time, you can ask me. We look at it during the webinar, or we look at it during the class, or we look at it, in the trading room. If I'm in the trading room, I will go in and say, okay, let's look at the questions you guys have. You can't do that, Michael. Sorry. I didn't expect that. One of my traders was bringing up a chart there. Nope, we can't show other people's charts. Sorry about that. I'm sorry for that. I didn't know that was a chart from somebody else. My trader just showed up. We can't show other people's chart in the webinar. That's not good. Sorry for that. My fault. I should have asked what that chart was about. I just saw the link and clicked on it. We can't do that. It's not ethically right to do things like that. So every trader on their own could decide whether they want to look at somebody else's chart, and they could go and click as much as they want and do it. Right? You can go and click as much as you want and check it for yourself. So let's go. Sorry about that. So if ever that trader sees it, my apologies to you. Let's go. Come on. What are the questions? Daily webinar, sometime about an hour. If we're looking at a question, sometime hour and a half, sometime 45 minutes. We don't, believe me, I trade full time. I don't limit myself to what we have to do in terms of knowledge, right? If I get a question and we have to take 2 hours to do it, we'll do it in 2 hours. A few good questions. Let me see that I missed. What kind of correction structure difficult? What about the US? We look at that. Trend lines need to be known. Oh, that's Sherman and Mark telling you guys, do you need to know that, Ozzy? Ozzy will go up from now to the. That's a question, Ozzy. No, we don't look at that. I'm based in the UK, not Everton, and the course live. Is it still possible? Yep. We have traders from New Zealand all the way to Canada, so it doesn't matter where you are. You will get chance for the recordings. You will get chance to do your practicals. We cater for that. Availability for the program. The classes are 6 to 7 a.m. New York time. Basically 6 to 7 a.m. New York. So once you can make it live, it's good. You will ask questions. If you watch the recordings, then you will need to be at least once a week in the group at that time to do the practical part. Everything is recorded. Everything we have, even the webinar is recorded. Every single thing we do, we record. There are a few good questions. What's your suite? Knowledge. Knowledge. Learn to trade. Here's the basics of trading. If you're absolutely new, and this is what newcomers get wrong. The number one thing you need is knowledge. Okay, that I'm trying to write with this thing, but it's not writing very clearly, right? So the number one thing you need is knowledge. Everything else is secondary. People say you need to know money management. You need to no. You need to have the knowledge. Money management is based on the knowledge you have, right? You first have to have the knowledge, and then you will work out your strategy and money management. They are based on the fact that you have the knowledge. Because if you don't have the knowledge, I don't care what good money management you're using or what strategy you're going to fail because you simply don't know what you're doing. Right? I make this example over and over to people. Right? Because I was a medical student. That is why I'll make this example to you guys. I was in the operating theater when this doctor walked in. There were like 4 doctors preparing this patient for a brain surgery. 4 doctors around, they prepare the patient, and then this guy just walk in, get his gloves, the nurse gloves him up, set him up. He goes there for 1 hour, he does the operation, walk away. The other doctors take over to stitch up and do what they have to do. And I think about 45 minutes. And that was all he did. And I asked my teacher, the guy who brought me into that theater, while we were doing practicals, he brought me in and he said, well, I said, that's in the West. They weren't thinking, that was the Soviet days. They weren't thinking about that. I said, in the West, that's a couple of $100,000 operation that guy did in half an hour, At least $150,000 for an operation like that. Right? Removing a brain tumor is pretty expensive. Right? And he did it in like half an hour. I said, how long do I have to learn to do that? I know he said to me, nothing. No, you just have to finish medicine. Then you do 3 years intern. Then you do the next 3 years specialist as being a neurosurgeon, and then you do a next 5 years practice as a neurosurgeon, and then maybe somebody will allow you to do the operation. That's like 10, 20 years away. That's a long time away. 10 years away before I'll be allowed to do that in half an hour. You see? And then maybe I will never ever get to do it if I'm not skillful enough. So without all of that knowledge and practice, you don't get to be at the top there. So you have to put in the knowledge and the practice. You have to have the knowledge and then you have to practice it. And then you start using a good money management and a good strategy to trade. So traders who said, well, you can just use money management and make money. No, they have no clue what believe me, they themselves have no clue what they're talking about. Because they don't have the knowledge. If they had the knowledge, they would not tell you that BS. Right? They would never tell you that BS if they had the knowledge. The reason they're selling you that BS, you should never ever buy a strategy, and you should never buy any indicator. Never ever buy a strategy or an indicator. You pay for time that people are going to teach you the knowledge. If someone says, I will make you the best runner in the world, I have a strategy for you to run, but you just pay me and I'll give you the strategy and you go become the best runner. Run away from him. If he says, I will train you to run, I'll take you and train you until you beat Usain Bolt, then okay, good. You'll probably give him a chance. To train you, that's the number one word, training. This is a skill. You need to be trained to do it. You know how many traders buy all sorts of strategy and they go nowhere with it? Because they will get nowhere with it. It's useless. If you see somebody selling you a strategy, an indicator, or some BS that thinks is going to make you a trader, good luck with that. Good luck with becoming a good whatever, anything else by buying one video or a couple videos. Unless you do the work, unless you're trained to do the work correctly. Why do you think every sports team has a coach? They have a lot of videos. They could just show them, let them sit down and watch the videos whole day, right? These guys could be watching so much videos, they may be the best sportsmen in the world, right? But that's not how it works. That's why they have a coach. And believe me, if you're talking about football, and I don't know about a lot of sports because I'm not much of a sports guy, but the Russians paid that guy $200 million to come and train their football team. I mean, amazing, right? They brought the guy from Holland and paid him $200 million to train their guys to become footballer. Why didn't they show them a couple of videos? And said, okay, look at these videos, watch how these guys play, and you will go ahead and you'll play like that. Right? Watch how I play, and then you can go and play like that. It doesn't work like that, guys. It's very. If it was working like that, we'll all be pros. It doesn't work like that. You can't watch a video and know what to do. You have to be trained. And it's a process that is not short. That is why our course is 6 weeks, and that's just the beginning of the course. After 6 weeks, you're with us for the rest of your life. You will be getting a lot of training. A lot of these very experienced guys in the room are going to help you. I am here to help you, and hopefully that you get successful. We have traders who are very successful, and we hope that all of them becomes very successful. That's all. That's about it. That's what I wanted to get over to you today. Viewer 80 just missed the entire point I talked. So he is looking for a trade. Can you tell me, can I buy crude oil right now? That's not what we're discussing, crude oil long, right? I'm trying to give you the principles of how you can become a successful trader, and all you're interested in one trade. How you join the training course? We have one in January, and there are only 5 spots remaining out of the 15 people already paid and are in the group. 15 traders already paid for that course. So you can join the group anytime. Just Skype me. All you have to do is Skype me. I'll give you the details. I don't have a website because it was never intended for me to make this a business. And more traders want me to train them, especially since I come to TradingView. So we have increased that. My Skype is. When you Skype me, please say I'm interested in the training course, because I get a lot of people add me to Skype just because I'm a trader. They add me, right? Just say you're interested in the training course and let me know who so I can give you details about it. I still need to talk to you. I talk to all of my traders to see whether they're ready for the course. You need to have at least about a year experience, and you need to have capital to trade. So if you don't have capital to trade, which means if you're trading a $1,000 or $2,000 or $3,000, it doesn't make sense you take the course, because you have to pay for the course. You don't have capital to trade. So make sure you're well capitalized. That means you have capital to trade after the course. Make sure you have at least some experience. I normally say 1 year, but maybe at 8 months you're pretty much, you have all the basics at 8 months, because we don't do basic stuff. I would not tell you the very basic stuff about trading. I will just go right into the advanced stuff, which means I'm not telling you what is bear flag, bull flag, triangle. I would not tell you all of that stuff. We're going right into the charts and start doing the work. I don't recommend any minimum capital, but I mean, here's the deal. Okay, you pay me $2,500 to learn to trade. I train you, you become a very good trader. Now, what do you do with that knowledge? Right? You need to have a capital to use it, to make that knowledge, to put that knowledge into play. So if you're like Sherman, sorry, I'm using as an example, you can make back that money in a week, right? Because he's trading a good size capital. He made back that money in a week. But if you have only a $1,000 after you paid me, it will take you a year to make back that money, and maybe a couple years to do it, right? So I don't want you to pay me and then take 2 years to make back that money. It's not worth it. It's a waste of time, whereas some other traders could do it. So if you're telling me I'm training because I will get a work as a trader somewhere, well, that's a different story, right? But I assume most people are training to learn. So, the number one thing you would need is capital, because if you don't have capital, how are you going to trade? You will just eventually stop trading because you can't use the knowledge, right? So the idea is that you can use the knowledge, and because you're in the group permanently, the idea is that you will have money to trade to, right? I'm not doing this as a business. You can believe it or not, because I refuse a lot of people from taking the course. That's not how business people do. They'll sell it to every one of you. They'll tell you to borrow money and buy it. I do not do that. And there may be some of you in here who have refused to take the course. If you're genuine, you'll probably say, well, that's true. A lot of you know that I tell you not to take the course because you're not ready for it. And some of you will call me and I may tell you that you're not ready for the course. Basically, because I'm genuine in the idea of the course is to help you to become a better trader. It's never as a business. Not meant to be. So During the training, you should not trade at all. During the training, you should be concentrating on the work, not on training. Training is not what you want to do during that thing, right? So, okay, guys, this is about an hour long. We don't want to make it too long because I really don't have the time to go and edit these things and put it in YouTube. I'm going to put it just as it is. So I hope the traders who have the time to watch it for an hour on YouTube, you could fast forward or do whatever you want, with it. Are not very angry that I didn't edit it. Everything is going to go as it is. Let me stop the recording. I think there won't be any more questions that demand recording on it.